I'm Charlotte Robinson. I'm the president of the Chamber of Commerce, and we're so thrilled that MNP has offered to provide this information and Q&A session for our members today, as we're definitely all trying to keep up on what's happening with all the different programs that are coming out from the government. And it's always great to have tax experts that can provide advice and guidance. So I want to say thank you to MNP for their help today. So without further ado, I'm going to get Steve Blazino is going to start the presentation. Steve is the partner for tax and valuation services with MNP here in the Thunder Bay office. And he's going to start with a little bit of an overview. He's also got a few colleagues with him that he'll introduce who are going to help with fielding questions. And so what we're going to do is if you have a question, is just post your question in the Zoom group chat. So that should be available through on the bottom of your screen. There's a chat function there. Then we'll call you out to either ask your question in the text, or else just say you have a question, and then we can call you out to ask the question on the audio. Now it sounds like some folks are having some challenges, so I'll address those in the chat and pass it over to Steve Blazino. So here you go, Steve.
Thanks, Charlotte. Just one question. So with the chats coming in, we won't see them live. You'll moderate that?
I'll moderate that, and then I'll pass the question on to you or tell you who the question is. Yeah.
Okay, perfect. Okay, well, thanks, everyone. Thanks for the opportunity. And as Charlotte mentioned in her introduction, these things are changing weekly. I think I'd add they're changing daily, if not hourly. In fact, the CERB on the CRE website, that changed this morning when we went to open it to prep for this presentation. So just keep that in mind. This is new legislation. The legislation and qualifications are very complex. They're being interpreted by us daily, and some interpretations may not be entirely correct. CRA may have different interpretations than we have. Who I do have with me, and I hope they're on, is Amanda Paquette. She is a Thunder Bay tax accountant from my Thunder Bay office that I work daily with. And Sean Moorfield, he is a senior manager from our Saskatoon office. He will help with the presentation, and he also wants to go over the Workshare program that may be available to some of you, which is under the EI program, and not so much an income tax program. So we were given a few type of general questions by Charlotte ahead of time, and we're going to start with the Canadian Emergency Response Benefit. And so I'll turn it over to Amanda just to briefly give an overview or answer the general questions that were given to us there.
Okay, I think I've unmuted myself now.
You have.
Okay, thanks, Steve. So the Canada Emergency Response Benefit, the CERB, is probably the one that people know most about nowadays because it was on April the 6th and people have been applying for it. So generally it's taxable benefit for individuals, $2,000 every 4 weeks for up to approximately 4 months or 4 periods of 4 weeks to workers who have lost their income as a result of COVID-19. So that has changed a bit, we'll get to that, but essentially it's anyone who has lost their job if they're sick, quarantined, or looking after someone who's sick or quarantined. It also applies to working parents and those people who might be staying home to look after children or others. So it applies to anyone who's earned employment income or self-employment income or provincial and federal benefits and who are not otherwise eligible for EI as well. So generally the CRA has given some guidelines. So it's anyone who lives in Canada who's at least 15 years old, stopped working, or now, as of yesterday, who is earning up to $1,000. And these are people who have not voluntarily quit their job. So it has to be they've either lost their work or they're hours are significantly reduced. And they have to have had at least $5,000 of income in 2019 or in the past 12 months prior to the date of application. So with that, we've been asked, one of the main questions is what kind of income is actually eligible for the CERB? So the CRA has outlined employment income, so regular remuneration, self-employment income, and provincial or federal benefits related to maternity or paternity leave would qualify. And some more detail was given in a question and answer on the CRA website, which is now available. I'm sure we can either share the link in the chat or maybe Charlotte can provide that afterwards. But the CRA has answered a few more questions that non-eligible dividends paid to an individual would also qualify as eligible income towards that $5,000 required to be eligible. The CRA has referred to these non-eligible dividends as generally those that are paid out of corporate income that was taxed at the small business rate. So this would not be eligible dividends, just non-eligible.
Yeah, and just to interrupt, non-eligible, it's not that it's non-taxable. It's just a term for the dividends paid out of your after-tax earning that you paid the small business limit on. So it's basically dividend out of the CCPC to yourself.
Correct. Thanks, Steve. And then also included in employment and self-employment income could be tips declared as income, honoraria, such as nominal amounts that are paid to emergency services, volunteers, and royalties were also mentioned. Those are potentially paid to, say, an artist for work that's been contracted pre-crisis. So with that, we've gained a little bit of clarity as to what would qualify. I know that dividends were a big question. Now, with regard to yesterday's update announced by Prime Minister Trudeau, he announced that people who are making up to $1,000 per month, as well as seasonal workers and potentially people whose EI has run out, could now qualify for the CERB. So this would especially help bringing part-time workers back to essential services, so a grocery store worker or a pharmacy worker, that type of person. And it's important to note also that for the first CERB claim, a person cannot have earned more than $1,000 in employment or self-employment income for 14 or more consecutive days within that 4-week benefit period. And then for subsequent claims, a person cannot have earned more than $1,000 for the entire 4-week benefit period. So the first period for 14 consecutive days, not earning more than $1,000, and then for the subsequent claims, it would apply for the entire 4-week period. So one of the other questions, I'm just going back to the question list here. How to apply for the CERB. So the CRA has updated, even as of today, its application portal online. So it can be applied for online or by telephone. And there have been some more detailed instructions given for applicants in order to help prevent duplicate applications or incorrect or possibly ineligible applications. So they've been very helpful in trying to direct people who should actually apply for this and who should either continue to, if they're eligible for EI and previously were, just continue to receive EI benefits, or perhaps they're not qualified at all. And again, individuals can apply in 4-week period increments, which are listed on the CRA website as well, up to 4 periods or 16 weeks total. And yeah, just again, anyone who was already receiving regular EI benefits, whether it's regular or sickness benefits, they would continue to receive those benefits and would not apply for the CERB. Having said that, if a person applies for the CERB, it would not prevent them from receiving EI benefits after the claim period. So a main takeaway then is, yes, the CERB is a taxable benefit. So that benefit would be included in 2020 personal tax return income on a slip. And it would be taxed based on the person's marginal tax bracket. So if we're looking at a planning point, your tax rate would be based on your marginal tax rate at the time for that year. And one other question that I saw, it wasn't necessarily given, but I've seen it over the last couple of days, is why would I need to repay what I have received for the CERB if I received that benefit? Well, some people have accidentally or inadvertently applied for both EI and the CERB and received either a double payment or a payment that shouldn't have come. And so in that case, some people will be required to repay those CERB benefits. And in other cases, someone would just apply for the CERB but actually couldn't qualify. And the CRA will be following up with people on an individual basis at that time where they start reviewing these claims. So they've said, you know, kind of, don't call us, we'll call you if you realize that there's a problem. But they did give instructions on their website of how to return a payment as well, for those who want to voluntarily do that.
Right, and part of the reason this can happen is the EI is from Service Canada, whereas the CERB is through CRA. So they're two arms of the government, and they will link your social insurance numbers sooner or later. But that's how the mistake can happen.
So we have a question as to, does the CERB apply to students? So do you have any clarity on that piece?
There was some information given. Now, for students who didn't previously have employment income, that's where they would get caught. So it's not for someone who hasn't had income prior to COVID-19. It's for someone who had employment, that $5,000 for the last 12 months before. So we're finding a lot of students may or may not actually qualify for this. Does anyone have anything to add to that?
No, at this point, it's basically like fresh off the press that the new rules for the CERB and the $1,000. So I believe that is correct at this point in time. The problem was some students weren't earning the $5,000.
Yeah, and if you look at the verbiage on the website, it's essentially, who is eligible. The benefit is available to workers who are residing in Canada who are at least 15 years old and who have had employment or self-employment income of at least $5,000 in 2019. So I don't necessarily think it's one of those things where if you're a student, you get to apply for it. It's if you meet those conditions and you just happen to be a student as well, then you would qualify for the CERB.
And Sean, there's a question about the impact of CERB on maternity leave. So if someone is currently receiving CERB and then goes on maternity leave, will that have an impact on their maternity leave benefits, or what's the scenario there?
That's a great question, and basically what we've come to understand is that if you are receiving the CERB, that sort of disqualifies you from other programs. So depending on how what the maternity leave looks like and essentially who's paying for it, that would then dictate what you're allowed to do.
Yeah, right. And if you're going back from maternity leave and there isn't work because of the COVID-19, that point you would apply for the CERB if you're just getting off maternity right now.
Yep.
Excellent. Okay, are there any more questions on the CERB? If not, then I'll pass it. So the next question is about wage subsidy. So do we want to move on to wage subsidy, Amanda, or did you have further things on the CERB?
I think I covered probably everything we need to talk about for the CERB at this point. So I think Steve was going to talk about the wage subsidy.
Yes, thanks, Amanda. And that was a great overview. Just in general, when you're looking at the CERB, remember you've had to have stopped working because of COVID-19. That is the general overview or the criteria. So the Canadian Emergency Wage Subsidy, there's actually two wage subsidies available. The CEWS, Canadian Emergency Wage Subsidy, just came in to legislation or just passed on Saturday. So it is very new. Excuse me. And again, the legislation is complex and pages of complexities and entwined with different sections. So it's not fully known all the answers or what qualifies, what doesn't qualify. But there's also, to back up, there was the temporary wage subsidy. So the temporary wage subsidy was announced a while ago, and what it is 10% of the remuneration paid from March 18th up to June 19th, with a maximum of $13.75 per employee, up to $25,000 in total per employer. So if you have two associated employers or two related employers, they get their own limit because it's per employer. So this is a backup to if you do not qualify for the Canadian Emergency Wage Subsidy. I can go over I'll just briefly more on the temporary wage subsidy, and how it works is you skinny up your withholdings that you pay CERA during the qualifying period. But if you miss doing that, you can always catch it up. You can catch it up even if it's outside the qualifying period, as long as the wages were paid during the qualifying period. And if you miss it altogether, or you're not sure if you qualify and you want to take your time to make sure you qualify, you can take it off your 2019 T4 once you do your T4 refund or an application to their 2021 remittances will be applied. So the Canada Emergency Wage Subsidy, this is a subsidy that is available to eligible employers, which equals 75% of the wages paid to eligible employees. So 75% of the eligible wages paid to employees to a maximum of 847 per week. This one is it sounds great. The problem or the issue with this one is you need to have a drop in revenues, and your revenues have to drop in March by 15% over last March, or you can take January and February's average revenue, and if your March drop is 15% or greater, then you qualify. And then for April and May, it has to be a 30% drop. Now, if you chose to use the average of January and February as your base, well, you have to use that average for May or April and May's revenues. And if you chose to choose March 2019 as your base for March, then your April 1 is April 19 and your May 1 is May 19. So first you have to have that drop in revenue. And if you have that drop in revenue, you may not have employees employed anymore. So you have to have the drop in revenue and employees employed, or paying them at least to be employed, even if maybe they're just staying at home and you wanted to keep them on payroll to keep key employees. So that's a very brief overview. So one other thing I wanted to mention is if you have a non-arm's length employee, so if you're related to the employer, excuse me, and you did not take wages out from January to March 15th of 2020, any wage you paid to that non-arm's length person after the crisis period is, or pre-crisis period, sorry, is not eligible. So if you were on a dividend remuneration plan, or you just weren't taking money out, or your spouse wasn't taking money out, even if they were legitimately working for the company, the wages are not eligible. Now, this may change down the road, but at this point, it's not eligible, and it is what it is. There's nothing we can do about that at this point in time. So a couple of the questions that were given to us are how to calculate revenues. Well, is it cash or tax credits? The government has given the benefit that you can use the normal accrual method. That's how we're taxed on a normal basis, is you use the accrual method, not the cash method. But you can choose to use the cash method if you want to, if that's to your benefit. One thing to remember is if you go to the cash basis, say for the March period, well, then you're stuck doing it for April and May. So you may or may not want to rush to what method you're going to use. Excuse me. The big benefit of the cash method that I can think of is our landlords. If a landlord has a lease outstanding and they don't get paid for, say, April, and the revenue is supposed to be $10,000, but you received nothing, well, your revenue hasn't decreased, because under general accounting principles and tax rules, your gross revenue is still $10,000. You just have an allowance for a doubtful account for 10,000. So it's in and out, but gross revenues have not changed. But if you can use the cash basis, well, obviously your cash basis revenue is 0 for April. How long will it take for the money to flow? The government we know the government isn't quick at the best of times, but they are really trying this time to get the money into people's pockets. They want employees to keep employers to keep employees working. So they're trying to streamline this. At this point in time, we have no idea how long it's going to take, but there is an issue with timing, because if you qualify for March, you should have made your payroll remittances the other day on April 15th. And if you can't even apply yet because the program is not available to be applied for yet, so you may be out money, you may not be able to apply for another week or two, and you may not get your money till after May 15th when your next payroll is due. One idea that is out there is that they want the banks to administer this, to streamline it, to make it quicker, so that you apply, the banks send you money, and the banks then collect the money from CRA over time. It's yet to be seen how that is going to work. Those were the basic questions that were given. A few things that I wanted to just quickly talk about is the periods. The periods are kind of a little confusing. Excuse me, sorry. The first period that is applicable is March 15th to April 11th. So March 15th to April 11th. So you use your March 19 revenue to see if you're 50% reduced, or the average of January and February 2020. Period 2 is April 12th to May 9th. So April 12th to May 9th. So you use either April 2019 as your benchmark, or if you chose to use January and February's average, you use the average again for January and February to see if you're down 30%. Period 3, the final period as of now, is May 10th to June 6th. One other important note is if you qualify for one period, you automatically qualify for the next. So if you qualify for the March period, you need not worry about April period because you qualify, but you have to re-qualify for the May period. One other thing, or two other things I wanted to quickly mention. The way I read the legislation at this point in time, one of the key things is wages are available, eligible wages are applicable unless the person was not working for 14 days during the period. So if we think about period 2 that starts April 12th, if you do not hire these people back by April 26th, they will not be available for that period. So you can pay them the first week of May for work, but those wages do not qualify under how the current legislation is written. Lastly, penalties are large. The penalties on these are virtually unprecedented. You may pay back what you received plus penalties, and plus your name can be known. It could be a public notification of your name, or the name of the employer or the applicant. So what they're really wanting to do is they want to make sure that people understand this is financial aid. It's not a tax loophole. It's not a cash grab. It's for businesses that fit these criteria and are suffering financially. That's an overview of the wage subsidy.
Okay, if anybody has any additional questions for Steve about the either the 10% wage subsidy or the 75% wage subsidy, please note in the chat, and you can either write your question, or if you just want to say I have a question, I can unmute you so you can ask the question. So I'll give you a few moments just to do that before we move on to the next topic. I don't see anyone telling me they have a question. So, oh, we have a question from Geraldine. Would it be better to wait to apply for the subsidy as we can't apply now? Geraldine, I might just unmute you so you can maybe provide a little more clarity on the question.
Or I'm wondering, do you mean the temporary wage subsidy, apply for it now, and then once you can apply for the Canadian emergency wage subsidy, apply for that then? Is that the crux of the question?
Geraldine, you go ahead.
Okay, so can you hear me?
Yep.
Yep.
Okay, so I've been watching where I can apply for the wage subsidy and have not found a way to apply. And I keep hearing that there's going to be more information. So that's why I'm wondering if it isn't better to wait and then ask for the subsidy after the fact.
Yeah, and that's, that's a really good point. And with clients and even staff wanting answers or wanting to know what it is, the government is bringing these programs out there, but the details and how to apply for them come after the fact because they have to pass legislation first. So yeah, you cannot apply for the Canadian Employment Wage Subsidy at this point. So one of the point that's a good point is that what you can do is apply for the temporary wage subsidy, skinny up your withholdings for 10% of the gross payroll. And that will probably, if you do qualify later for the Canadian wage subsidy, that will reduce what you get from that subsidy. So if you want to apply for the temporary wage subsidy, you can do so and reduce your Canadian emergency wage subsidy down the road.
Okay, and then we have a question from John. Is the qualifying period for the revenue test the specific dates you noted or the calendar month? And I think it's the calendar month, correctly?
Right, the revenue is, that's what makes it confusing. The period of claim is April 12th to May 9th, but you use April's revenue for the period of eligibility.
Okay, so I think that's all the questions. Oh, we have a question from Mark. So Mark, I'm going to unmute you. Go ahead.
Thanks, Steve. So the government has implied that they will be covering EI and CPP. What can you comment on that?
Oh, a good point. EI and CPP will be covered, the employer portion, not the employee portion, only the employer portion, if you're paying the person to be at home and they're not providing services. So if you're keeping them on payroll because they're a key employee or and you want to help them financially, you do not have to pay the CPP and EI as long as they did not provide services during the relevant period. Can I just add one thing too? On the temporary wage subsidy, I mentioned it's 10% of the wages paid that you can reduce your payroll remittance by. That is the income tax portion only. CPP and EI must still be paid.
Okay, I think we have expired all the questions on the wage subsidy. So on to the next topic, Steve.
Okay, well, there was just a quick question about how will the government support impact their taxes. These are taxable. If you receive these subsidies in any way, they are taxable. And the steps to be taken now, as Amanda kind of mentioned, is just be ready that these are taxable. So if you get the CERB, it's at your marginal rate. If you get the temporary wage subsidy or the Canada Emergency Wage Subsidy, it's going to be at, if you're assuming you're a business or corporation, it's going to be at your corporate rate. The other thing to mention is these are tough times for everyone. Going in more debt is not ideal. I would stress, try not to go into more debt because you're just deferring the inevitable, but it's tough times for everyone. So next, what I'd like to do is turn the...
Before you move on, Steve,
okay.
we do have one last question from Wayne Faulkner. So W. Faulkner, go ahead.
Hello, Steve.
Hello.
It's Bill Faulkner from Digital Engineering. Our business is such that they're long-term projects. So we're gonna, and our people are all working from home right now, and they're still working on these projects, and that's going to take us right through the 3 months of wage subsidy. But the impact on us is going to hit us revenue-wise. I mean, the impact on us is going to hit us after that period.
Yep.
Is there anything in nothing I've read in the government legislation is going to address this? Have you come across anything?
No, and unless Sean or Amanda, correct me if I'm wrong, this is one of the ones I thought about, or we thought about at the start, is long-term projects are not going to be helped by this because your revenue is going to be there. Under general accounting principles, you're recording revenue over the period of the project, but the projects are drying up. Now, the only thing that may be able to help you is if you can use the cash basis. Maybe you're not collecting the receivables.
Right. So, okay. So there's nothing there. So then we just have to take the accrual or the cash basis, whichever going to suit us best. We may qualify for 1 or 2 of the 3 periods. So,
right. Yeah, and unfortunately, at this point, it is what it is. There are going to be people that fall through the cracks that deserve it, and
Right.
vice versa, right? There's people that are going to receive it that probably shouldn't, but it
Right.
can't be perfect at this point because they're just trying to move quickly.
Right. Okay, great. Thanks, Steve.
You're welcome. So I think we're kind of, what I wanted to do was add Sean into this to talk about another program that's out there that maybe some people don't know about. So Sean, do you mind taking over?
Absolutely, and that's a good segue from Bill's question. So one of the programs that's out there right now is called the WorkShare program, and we've been helping our clients apply for this program for 10 years. So it's been around for a while. And because it's been around for a while, it is a little bit, it's well known, and sort of the rules and whatnot are sort of out there. And so I'll chat a little bit about that. But what I wanted to say going into sort of this conversation, that the wage subsidy, based off of the remuneration to the organization, seems like the best option out there. But in several scenarios, the WorkShare program is going to be a great alternative. And essentially, what the WorkShare program is it's kind of like a quasi EI program, and I'll use an example to illustrate that. So, we have Steve, who's an employee with us. He's used to working 5 days a week. Now, let's say something happens in the economic environment, and now we cannot afford to bring on Steve for 5 full days. Let's say we only have enough work for him for 2 days. What the WorkShare program allows us to do is bring on Steve as an employee. The employer, i.e. me, pays Steve for 2 days. And then for the 3 days that he no longer has work, what he can do is he can then go on EI for those 3 days. And he can get up to 55% of his salary, up to the EI maximum. So what I like about this program is a number of things. Number one, it's a long-term play. So historically, WorkShare, you could put employees on WorkShare for a maximum of 38 weeks, but that has since been amended to include up to 76 weeks where they're eligible to be on the WorkShare program. So one of the things that we've been chatting a lot with our clients about a lot has been sort of the length at which we need to take advantage of these government programs. What I like about the WorkShare is, again, it's a long-term play. Right, so we can sort of take advantage of it for 76 weeks. The other thing that I do like about the WorkShare program itself is, prior to this legislation being released on Saturday, the indication that we got from the government in terms of how long the Canadian Emergency Wage Subsidy would take was somewhere in and around the ballpark of about 8 weeks. They have since amended that on the weekend to say it's going to take between 2 to 5 weeks for the portal to get up and running, and then everyone to get their cash. That's a long time to wait for money from the government. And a lot of our clients that we've been working with don't actually have sort of the war chest to wait it out for those 5-6 weeks. They sort of need immediate help now. If you apply for the WorkShare program, the government says that it takes about 10 days to for the approval process once you hit submit. It's taking closer to 12, 13 days, but let's just go with the 10 days. You could hypothetically get relief within 10 days, right? So it's a good program if companies are looking for something to sort of bridge the gap between now and when we actually get the Canadian Emergency Wage Subsidy. So to sort of summarize the benefits, if you were to look at the WorkShare program as a whole, what it allows you to do is cover a portion of your employee's time that you can no longer afford to bring them in. So hypothetically, you could reduce your payroll expenses by 60%. That's sort of the max that the WorkShare will allow you to do. And for that 60% that you are no longer paying your employees, they would be eligible for the WorkShare program, and they would receive EI directly. So I'm going to take a quick pause there. That's kind of a 10,000-foot view of the WorkShare program. Just wanted to open it up and see if there was any questions coming out of that. Okay.
Bill, did you have a question?
Yeah, unfortunately, it's still on the wage subsidy one. I just saw it up. Do you mind if I ask that one?
Absolutely, go ahead.
The wage subsidy, when you apply for it, like obviously in our situation, we're going to do better if we can wait until the 3 months are passed. If you know which method we use to determine revenue.
Mhm.
So, okay, will you still, the way you read it, okay, will you still be able to apply for those past periods?
Yeah, the way I understand it, Bill, is yes. I think you have till October 1st. I'm just looking at the legislation.
Oh,
I
okay.
don't remember off the top of my head, but
Don't ever remember seeing a date on that. But you said you thought you saw on October 1st?
that date sticks out in my head. We'll have to get back to you on that though to make sure.
Okay, great.
We've got another question in the chat about employees have been laid off and are now on EI or potentially CERB. With the work share program, would they be working 3 days a week, for instance, every week, or can the number of days a week vary, and when are they called back? So does anybody want to field that, or Geraldine, maybe you want to unmute and you can provide more clarity if that's needed to our experts.
You know what, Geraldine, that's a great question. So the way it works for WorkShare is if they have been laid off and they're coming back now, the beautiful thing about the WorkShare program is that it does allow you to flex week over week. So let's say 1 week you have a whole bunch of work coming in and you need your people in for 5 days, and then the next week they go back down to 2 days. It completely allows you to do that. The only caveat is that under the WorkShare program, you have to show a minimum of a 10% reduction in working hours and no more than a 60% reduction in working hours. And the week-to-week fluctuation doesn't matter, just as long as the aggregate time that your employees are on a WorkShare program is at least a 10% reduction. So week-to-week, it doesn't matter, as long as the average reduction is at least 10%. So great question, great question.
Okay, and then we have a question from Nina. If a person lost their hours but is still working, can they apply for the work share for the lost days? So I'm not sure if you could go back retroactive. I guess that's sort of the question.
Yeah. So the unfortunate thing with WorkShare is you cannot go back retroactively. You can only put them on the WorkShare program once you have been approved. But assuming that what the government says holds true, it should be about 10 days. That's a great question. So another one of the questions that I just got personally was, what do we have to show in order to apply for the WorkShare program? And this is kind of the beautiful thing about the WorkShare program is historically what companies had to do is show a 10% reduction in overall business revenue. That has since been amended. And now what they say is you have to show a 10% reduction in business activity or revenue. So on the actual application, they have gotten rid of the component that, or the little box where you put in your revenue to show the drop. So there's no sort of pre-qualifying, validation questions that will allow you to be entered into the program. But all you have to do to stay on the program is show week over week that your employees who are on the program are in fact working 10% fewer hours than pre-crisis. So that's sort of one of the eligibility questions as well. That's come up quite a bit is, do we need to show, a 10%, 15%, 30% reduction? And the answer is no. You just have to show over the life of the WorkShare application that your employees are working 10% less.
Perfect. Now, one of the questions that we're getting a lot is from seasonal businesses. So we have a lot of businesses that typically would be starting their operations in April or May. And so they don't apply, they're not really eligible for things like the wage subsidy to be able to bring their staff back to work to get things rolling again because they don't have a loss of revenue from March. Because there is no revenue in March. Are you aware of any programs that might apply to that type of a situation?
in that situation, I think they would be applicable if they had wage or sorry, revenue in April 2019. Because you use your period for April 2019 versus April 2020 revenues. And if there's a drop of 30% and you're paying your employees a wage, then you will be eligible for the Canada emergency wage subsidy.
So they may be able to look at it as the months go forward, but they certainly aren't able to do it, you know, for perhaps this current period. If they didn't have earnings last April, then they'd have to wait till potentially May to when they have. Yeah,
because there's no drop in revenue.
exactly.
Yeah.
Okay.
And I just want to go back to the last question. A qualifying entity is an entity if it files an application with the minister in respect of the qualifying period in prescribed form and manner before October 2020. So you have till September 30th to apply for the wage subsidy.
Can I ask a question? You said that you could get your money back through the Receiver General. Is that true, or do you have to? Once you apply, you could hold back your income taxes for the Receiver General, or is the government going to send you money?
Well, the temporary wage subsidy you do not apply for. You just do it. You reduce
No, I
your
meant the other one.
The Canada wage subsidy. No, that is going to be a subsidy. You're going to get a check from someone, either CRA or a bank.
Oh, okay. And also with the wage sharing program, I lost you for a bit, so I don't know if you said this. How does that affect the employee? Let's say in X number of weeks, we have to lay them off. Does that affect their EI going forward?
I don't think there would be any impact to the employee if you ended up having to lay them off later. If you were, because the wage subsidy that you're collecting, I believe, is after the fact, right? So they'll have worked those hours, you'll have paid them, and then you're getting the money back as the employer.
No, I was talking about the work share program.
Right.
The work share program. Okay.
The
Go
impact
ahead.
on the impact on the employee. Sean, are you available to answer that?
Looks like Sean's
We
maybe
may have lost
frozen.
Sean.
I
And
think
I'm
he's
not-
frozen. Yeah.
Okay, I'm not familiar with this program. My guess would be it does not affect the employee down the road EI eligibility because it's a separate program, but I would need Sean to answer that to be sure.
So if you email me the question, I can forward it to Sean, and we can get him to deal with you directly online after the fact, if that's helpful. Okay, so we've got another question here. A person who works two jobs, one was on contract, which they still have, but they lost the second, which they made for use for extra money. Will they be eligible for any funds? So I guess that depends on whether they have less than $1,000 in earnings in a month, correct?
Yeah, assuming they're an individual and not a corporation paying themselves a wage. Yeah, you'd have to look at what their income was before and after crisis.
Perfect. So it looks like that's all the questions that folks can think of maybe right now. But if you do have questions that come up after the fact, you can email me, Charla, at tbchamber.ca, and we'll be happy to pass those questions along to Steve and the group at MNP to try to answer those questions for you. So hopefully that is helpful. So if there's no other questions, I guess I'll say thanks again to Steve, Amanda, and Sean. Oh, it looks like we've got another question from
Just like Sean is back, I was wondering if you could answer that question for me about the the work share program.
Okay, so you want to ask the question again to Sean then?
Yeah, just the question, if you have somebody on this work share program and you end up having to lay them off in the future, does that affect their eligibility for EI?
Looks like we've lost Sean again.
Okay, I'll email it for you.
Okay, email it to me, we'll get that sorted. So I want to say thanks to Steve, Sean, Amanda, and the team at MNP for their capable assistance today. This has certainly been very informative. Again, if you have any questions, feel free to email them to me and I'll forward them so that they can respond to you directly. Also want to note that just before this webinar began, Prime Minister Trudeau indicated that the federal government will be working with the provinces to set up an emergency commercial rent assistance program, which is definitely something we've been hearing from a lot of businesses, that they have concerns about paying their rent and they're not eligible for the mortgage deferrals. So it sounds like help is on the way, and we'll be watching closely to see how that rolls out, and hopefully it will be of assistance to those that have issues with their rent payments. So thanks everybody for participating. Thanks again to MNP. Keep your eye on our website, tvchamber.ca. We do have numerous other webinars planned. Next week we'll be talking about employment law. So how does the changes to COVID in your business, and what does that mean for if you're laying off employees or reducing their hours? So that might be something that will be of interest to you. And so you can register for that through tvchamber.ca. Thanks so much for joining us, and have a great day. Take care.
Thanks, everyone.
Thanks, Charlotte.
Thanks.